What's going on? Happy new trading week. It is actually Sunday and the market has already opened. I've already recorded a couple reviews, but I'm going to redo it, try to make it a little bit shorter, a little bit more straight to the point, and we'll just see how this goes moving forward. Also, I was busy all day yesterday for the most part, helping a good friend of mine move. Really did like a whole 8-hour shift of just carrying shit. So wasn't able to do it yesterday. I probably would have still been able to release it yesterday. But the cool part is with the review and the outlook that we're going to be doing today, we have the benefit of already seeing how the market opened. And I'll be able to show you a little bit about how I navigate that right on Sunday. But as always, this is not financial advice, right? This is just educational and entertainment. It's going to be showing you the way that I do things, right? And so let's go ahead and get my screen share here. The video clip. Let's do that. Sounds like a good idea. When we playing sound. All right. And so what we want to start with, of course, is always going to be the economic calendar, right? And so what we see here and what I want to really emphasize is just that last week, every day except for Monday, which was a bank holiday, right? We had a medium or high impact news release for the USD, right? So we see on Tuesday up in here, right, the red and orange folders starting at 9:45. Wednesday was in the afternoon. Thursday morning again, 8:30. And then Friday morning, 8:30 was when it began, right? Looking ahead to next week, since we're already here, we see that tomorrow in the morning, starting at 8:30, we have medium impact and got another one at 10. Tuesday, high impact starting at 10 with a medium impact as well. Wednesday, same thing, 10 o'clock, high impact. Thursday, 8:30, medium impact. And then Friday, 10 o'clock, high impact. So 10 o'clock seems to be a repeating phenomenon this week. We have 4 days where we have a 10 a.m. news release. So probably going to be either very active before that type of days or very active after that type of days. So we shall see. All right. But now moving into the charts. So we have trying to move this out the way actually. Hold on, y'all. Hold on, give me a second. How do I hide this? I'll get this out of my way. There we go. All right. So of course you want to start with the dollar chart. All right, just looking at the weekly perspective. Last week we had officially completed 4 bullish weeks back to back to back. So just in my opinion, right, as far as inertia is concerned and things of that nature, don't want to fight against what's currently going on. So I am expecting still continue higher prices in the dollar, and I want to see how it will respond at that 105,631 level. All right, looking at it from the daily, getting to see a little bit more of the annotations and such. But Friday's close was very aggressive, a very bullish day. We actually closed above the midpoint of his weekly wick, the daily rejection block, and we got very close to that midpoint of daily wick. So also monitoring that 105,341 level, how price will respond if it's to trade there. Dropping down from there, really just the 30-minute on the dollar. I've already done this. I'll show you it on the Dow Jones though, but pretty much already. So the closing price, right, from last week on Friday to the opening price of this new trading week. Want to mark up both of those, and then also just want to measure the middle of it. And that's what's called a new week opening gap. That's going to hold a lot of weight as far as seeing it act as dynamic support and resistance for price. But there you have it, dollar chart, right? Pretty much that analysis, we are expecting higher prices. Just while we're looking at it from the 30-minute perspective and seeing that there are inefficiencies all throughout this price leg here. If it is to trade lower, I will maybe want to see it trade into, no more than about 3 of these areas down here that I would view as potential support and would need one of them to, well, all of them, honestly, I would hope to show some sort of sensitivity, but would definitely want to see eventually, right, a return to this new week opening gap after trading lower, if it does so, into any of this inefficiency down here that's left from Friday. Because the rest of the days, to be honest, well, with the exception of Wednesday, were very choppy. Wednesday, we finally got decisively bullish, left some inefficiencies there. Really just, not really, actually. The only one is down here, which is right in line with a new day opening gap from last week. But yeah, so that's the dollar chart right there for you, since we've already opened for the week. Just looking at and actually that's the outlook, right? So just quick review on that. So from this 30-minute perspective, that yellow line, which is where we opened up last week, I'm just going to transfer that to where we are now, but I'll probably wait till midnight tonight. But so yeah, we opened up with a gap higher last week, and you see the contrast here. We opened up with a gap lower this week. All right, and let me go ahead and make this a little bit full screen so you can see just what I'm talking about. All right, I guess they don't want me to go full screen, huh? What in the world is going on? I see it's bugging. All right, there we go. Let me get full screen. Okay. Yeah, so up here, you see the close was higher and the open was lower. So we open up with a gap lower. And then contrast that with last week, which is annotated differently. I was using a rectangle before, but what I'm going to start doing is just using the 3 lines that you see that I've used this week. But yeah, we closed here that Friday before last Sunday, and then we opened up here. So we opened up with a gap higher. And you see how we worked this gap pretty much on Monday. We had a shortened, shortened trading session and other assets, but the dollar was just moving the whole time. It never stopped or anything like that. But then we see Tuesday, pretty much the same concept. We're utilizing this range, the new week opening gap range, but we were very volatile, right? Larger range than we had on Monday. And like I said, going into Wednesday, we finally got decisively bullish. And Thursday, we saw continuation. We finally traded to that midpoint at weekly wick. And then we retraced lower. And then going into Friday, right, very explosive bullish day. But again, that's the dollar chart for you. Getting up out of here, out of the full screen, right quick. How do I do that? That's the funny thing is it showed me, and I didn't take advantage. Let me see. It's saying up F, up plus F. Okay, cool. We're gonna try that. But yeah, this still gonna be short and sweet. Don't you worry. I'm just having some learning process right here with Zoom. But yeah, so what I'm gonna do real quick. I know I tend to, well, in the last few videos, I've tended to speak a little bit about all of the US stock indices, and I've realized that's a little bit too much, making the videos way too long. So what I'm going to do is focus on the one that I plan on trading that week, right? Specifically as well for the outlook. And then for that review process, it's going to be pretty much the same. If there's anything that I feel like is important to point out as far as a difference, I'll go and do that. But this week in particular, we didn't have anything that really on like the higher time frame would cause any need to really go into any type of explanation about any differences between how they traded, right? They all, for the most part, traded lower, and we just scanned through that as quickly on the weekly chart. That last, right, this candle right here, Tuesday, what it says Tuesday, 21, February 23, right down there at the bottom. This was last week's candle. So you can see we had a down close week across the board, right? So pretty much what you would like to see. There wasn't too much discrepancy between the way that they all traded. But yeah, so weekly chart on Dow Jones. We've been talking about this fib since, Lord knows when, since my first video, potentially looking for prices to be willing to trade lower from within this range of these red lines up here. We've gotten aggressive away from that last week, finally traded back to that midpoint of that Fibonacci where we were rejected from last time we were here, and caused all of that basically consolidation inside of the red lines, right? The premium levels of that Fibonacci. But so we traded down aggressively. We closed below the wicks, right? All of these wicks are that consolidation. So I love to see that, right? And especially if the dollar is going to continue higher, I really want to see continue with lower prices here on Dow Jones. my first level that I'm watching for sure. Well, technically, if I'm on a weekly chart, I want to utilize any open, high, lower close that was within reach. So the opening price of this week from that week back in November of 2022, that opening price comes in at 32512. So I'm actually looking at that level first and how price responds there, right? Because that's a really significant area. And actually, if you pay attention here, right, this down close candle closed here, this candle opened down here. So in between these weeks, we also had a week opening gap that formed. And it's just very, cool to see that that is right in line with where this candle stopped last week as well, right within the gap between where this one closed and this one opened at. And so just looking at that from that perspective, like I said, looking for continued lower prices here on Dow Jones. We are currently sitting at 32841. Like I said, that first objective I'm looking at is 32512. So we're just about 300 points already, which I mean is plenty for a whole week, to be honest. Like you catch 300 points on Dow Jones with a decent order size, then you're looking pretty good. But so going down to the daily chart and just getting a little view of how last week traded right off the daily, they for whatever reason didn't put Monday's candle in here because it was an abbreviated session. But we do see Tuesday was very aggressive trading lower, and then we ultimately just saw continuation for the rest of the week, even though Thursday was an outside bar and it traded above Wednesday's high and it also took out Wednesday's low. Closed bullish, which could have had people thinking that it was ready to run back higher, all the bulls in the market, those who really just want to see the prices of these assets go up. I know that by nature or by my own determined self-proclaimed nature, I consider myself a bear, but I really feel like that's only because of the reality of the situations and with all the things that I've learned so far. It really doesn't make sense for the markets to be rallying right now too much or making new all-time highs with the condition of our United States economy as well as the global economy. But that's neither here nor there. My job as a trader, and let me just put the model up real quick. Let me go back to just showing me honestly. So I'm gonna unshare my screen real quick, and how do I do that? Actually, okay, so this should bring that back up. Boom. And I'm gonna stop the share, come back to me, show you this model real quick, right? BTA trading model, which stands for believe then achieve. So the real goal of a professional trader is to trade well. It's not about being right or wrong. It's about being profitable to take care of my fucking family, right? And so that little quote up there underneath BTA trading model, partials pay 100% of the time. And so just what I mean by that is that, for example, let me just pull the charts back up real quick. So share again, right? My video clip, okay. So what I mean by that is, for example, let's say that I was inside of a trade. Let's say Tuesday, I caught a sale on US30. I did not, but let's say I caught a sale on US30 up here, at the opening price. And as you can see, it traded very aggressively lower. And then, like I said, as we got into Thursday, right, we see it dip one more time lower, but then the close is higher. So what could have happened here, honestly, and I've seen it happen before, where we're very bearish or even bullish, for example, and if we trade down to a higher time frame level, that makes sense for it to have at least a short-term retracement. We will see that retracement happen, right? And let's so imagine that these two candles aren't here and that this started to run back higher, right? Like I said, my entry would have hypothetically been up here. I'm in profit this day, I'm in profit this day, and I'm still in profit this day, but let's just say, like I said, these don't exist. And then this day actually, this Friday actually was aggressive trading higher. Let's say, traded back up to this line here. So by the time it gets back up here and it closes on Friday, and I got in on Tuesday up here thinking I was about to catch the move all the way to, whatever low I thought it might go to before I got out. And that in this situation, and again, let's just look at the points 33836, for example. Let's say that's where we're at, and it got as low as 32820. So that's 1,000 points right there in 3 days. If within these 3 days there weren't any partials taken, meaning taking off some of the order size and banking some of the profit, building the account balance, and it started to retrace, and it runs all the way back up here to 33500. That's 700 points off the low. Out of 1,000 points that were in unrealized profits, 700 of those points were given back by not taking any type of partials off the table. And so that's why I put that up there, that partials pay 100% of the time, because unless you close some of the trade or all of the trade while you're in from up here looking for lower prices, you don't make any money. You don't get paid. So closing out partials, banking something off of your trade idea that's in profit will always pay you 100% of the time, and it will help you to stay profitable, right? But now, going back into the analysis. So on a daily chart, you can see a little bit closer, right? How we traded below that low, but look at where we traded into, that 50% of that fib, as well as back below December's low, but were rejected. And so, like I said, I'm still looking for lower prices, but these are going to be some really key levels that I need to see price slam through on the daily chart, ideally, and really leave some sort of inefficiency as well. And it wouldn't be bad it wouldn't be bad either to have an up close candle print here and then run that low aggressively, leaving some sort of inefficiency. That's what I would ideally like to see to give me confidence that we are going to see continued lower prices on Dow Jones. Now, and I don't even really use the hourly lately, but we will look at it real quick just to do the review part from last week. Well, no, that don't make any sense because the 30-minute gives you a little bit more clarity with the fact that the new week opening gap is typically marked up on this, but it's not. But you see what's cool about this is now I get to show you twice what I'm talking about, right? And so this way, maybe you won't forget. But you see, so we closed down here that previous Friday, right? This week opened right here. And actually, before I do that, how about I take this off and then I can put that, there we go, with the new one. So I don't even know what I just clicked. Just get into my computer information and stuff. I don't know if that's gonna be bad to hide that up. Oh, well, I really don't even know how that's saved on my my doc right there. But we're gonna keep it pushing. We're gonna keep it pushing. And I always know I should have one for that too. Bang, right there. Okay, right. So you see I marked up the close from the Friday before, the open from the Sunday, and now I'm measuring out the midpoint of that range. And so you see that, right, extended out of time. Last week, pretty much, we only worked it Sunday and then a little bit early on Monday. Weren't able to get back to it, right? Drifted lower. Tuesday, we got aggressive. We broke one of those red lines on that weekly fib. We trade through an old daily volume imbalance, right? Wednesday, we get into like a seek and destroy type conditions where we're just, right, running the low here, running the highs here, running the lows again, running the highs again, running the lows, trading off of that low, right? We can consolidating in here, going into the next morning where we take out highs and take out lows, right? Retrace aggressively, start to drift lower, right? Moving sideways, and then we pick up more momentum lower, taking out the low of the week and creating a new low of the week on Friday, getting into right that 50% of the weekly fib. And on the 30 minutes, interesting to see how the bodies, right, close on that December low before we trace off of that, right? And now we're back inside that weekly fib between the 62% and the 50%. But still looking for lower prices, going to really just be monitoring in a sense, right, this high here specifically, seeing how price will respond if it trades up to there, but also keeping in mind that right in here we have an inefficiency. So a lot of areas where I could expect to see some sort of reaction from this market this week so far. And again, like I said, I'll be able to show you twice, right? So utilizing those same templates. So we got, this is where we closed at on Friday on the low end of the green candles, over the bearish ones. And then we're open up this week. And again, the opening price of those bearish candles is going to be at the top because it means it traded lower. So it actually opened up higher, but then it closed lower. And then going into, right, measuring that midpoint of those levels, then we'll have a range to monitor. And we would, of course, have to get back below this range possibly use it as a sort of a resistance to see lower prices. So now I have several levels in a sense that I can be watching, right? So, oh dear Lord, we did it again. Oh yeah, and I do think that's no bueno because talking about my serial number and stuff. Like, geez, why is that even right there? But so buy side liquidity right there. Like I said, really monitor that. What I'm gonna do is put an alert here, and then just gonna put US30 ESL for buy side liquidity. And so now I have a area mark. It is a good 100 points away from where we're currently trading right now. So it's a pretty decent size move it would take for it to get up there. And I'll be very interested to see if it carries through any type of momentum and wants to challenge some highs from Thursday. All right, we got this high, and this high from Thursday. Remember, we had already taken out a lot of highs and lows once we dipped down on Tuesday between Wednesday and Thursday. So a lot of seek and destroy conditions in here. Wouldn't really expect it to go up there and reject without then continuing back aggressively lower. If anything, if it trades above those levels and it finds support there, then I would find reason to see it wanting to maybe even trade back up to last week's new week opening gap, because we didn't spend much time there at all. And it left, potential buy side liquidity up there as well. And so that's pretty much going to be it for this video. I mean, if you want real quick, and I'll just do it. I've been kind of tracking Bitcoin a little bit more lately. You see, I got it here marked up on a 3-minute chart. I'm actually in a trade right now, put a little bit of money in an offshore broker account so I can start trading crypto a little bit again. But let's show you the markup real quick. Really just monitoring this buy side liquidity up here at 25,250 for a while now. Since, as you can see, Thursday, February 16th, been monitoring this level. We traded up to it to the exact point, right? What was that? This past Tuesday. And then we drifted lower. We took out this low, which I was also watching. It was kind of just watching between the range of this high and the low. But look at this is a signature that I like to call hugging in a sense. So like when price trades below a level, but then it starts to consolidate, even though you're starting to see the bodies close and open further away from it, but then you don't really see any sort of aggressiveness or magnitude to continue lower, right? It's really just consolidating. And then it starts to drift back higher, start to close and open a little bit higher. And then we push back through with momentum. We even got a retest candle here. So when I see something like that, it's really just, in my mind, what I'm seeing is that they were just, accumulating all of the sell stops that were resting below this low here. And now they're going to use that to either, we have this inefficiency here, which I do have. These levels are specific core, the 25%, 50%, and 75% of this inefficiency. I'm watching on a smaller time frame how price responds to that. But what I'm really looking for is for it to start to seek now buy stops. So it took out sell stops, right, and accumulating them for quite a while here from Friday 24th until today. So, basically like a day and a half, 2 days of accumulating sell stops. Now I want to see them use that to run into some buy side liquidity so that they can either offset or cover, right, their buys that they accumulated down here, or to sell more, right? Let's say they are actively in a sell program, run it up into an area where they're willing buyers, and then sell more to those willing buyers, right? And then bring the price back down, right? Obviously attacking this low. And so just dropping down to the 30-minute real quick, kind of see how the 30 minutes has been responding. I watched all of this happen. Like I said, this was us getting back into that range. Once we traded above this one here, the 23553.57 is actually the midpoint of the inefficiency. Once we traded above the inefficiency, and we actually even traded above that 75%, to me, it's indicated that we would fill the whole inefficiency up and possibly trade higher. So when it dipped back down here, and as you can see right there, that 23332.79 level right here, which was that old low that was taken out that we've been hugging in a sense. What I did was I dropped down to a lower time frame where I was able to see some patterns that I like to see personally for trade entry. And that was this pretty much right here. right? We got a pretty large body candle trade down and close below that level, met with another candle that closes right back above and actually takes out that candle's high. We actually had an outside bar here, right? And so I like to see stuff like that. That pretty much to me was meaning anticipate this to be a support level, this down close candle. And so on this candle here, as we traded above, but then we were like fluctuating when we got back down there, and that was when I took my entry. And then as you can see, price running higher here on the 30-minute chart. Ideally, I'm looking for right this high to be taken out, but there's a lot of congestion in here when it's consolidation, which is why you see it traded up to that, and then we start to reject. Now we're consolidating right around that 50% at an inefficiency. And so every time it trades lower, I want to see it right go below an old low or into an area inefficiency, and then I want it to then rip higher from there. And so ultimately, if you notice this blue line up here, 23973.79, that's my ultimate target that I'm looking for if we are to continue on this buy program, seeking buy side liquidity. I have my target to get out of the trade up there, but as it ran up here, I did take off basically 60% of the position I had on. Like I said, partials pay 100% of the time. And I was very glad that I did, because obviously you see that was the highest high it made so far since about an hour ago. And now we are looking like we could possibly come back down to this low, which would take me out of the trade with just what I secured up here banked, which is okay with me. Like I said, partials pay 100% of the time. It's not about being right. It's not about being wrong. It's about being profitable. And so with that, I'm going to let you all go. Thanks for tuning in. If you learned something, please leave a like, comment, or subscribe. I'll talk to you later. Peace.